housing finance reform. As I'm sure you've seen, there's a very significantly increased emphasis on housing finance reform, both on this committee and I think in Congress in general, as well as at the level of the administration. In 2017, you gave a speech in which you outlined a few principles that you saw for how we should approach housing finance reform, and I'm just going to quote what you said. Do whatever we can to make the possibility of future housing bailouts as remote as possible, to change the system to attract large amounts of private capital, and that any guarantee should be explicit and transparent and should apply to securities, not to institutions, and to identify and build upon areas of bipartisan agreement. Do you still agree with those principles and how to approach it?
I sure do.
Well, good. I agree with them too, strongly. And we are going to be very aggressively trying to put together a bipartisan solution to this here on this committee and in Congress in general. And I just would like to ask you, first of all, if you'll commit to work with this committee in our efforts to build the right solution to this issue. And then secondly, any other comments you might want to make about how our nation should approach housing finance reform. And I'd ask you also to discuss how getting this fixed could impact our economy and could impact growth.
Yeah, so I do think, and I said this in those remarks, that I think that this is one of the big unfinished pieces of business in kind of the post-crisis reform period. Fannie and Freddie had to be taken over by the government fairly early on in the financial crisis. It was a big part of the financial crisis. And I think we have, the proposals that you've had in the past, and I'm sure the one that you'll have this year, I think they all have the right elements there. It's just a question of getting something done. And I think it would be really good for, for the economy and to get this off the off the federal government's balance sheet and get a lot of private capital between the taxpayer and the housing risk, if you will. So I think it'd be a very positive thing for the economy, and of course we'll be delighted to work with you. We have, I think we have some very strong, experienced staffers in the housing area, and we'd be happy to provide whatever expert help we can.
All right, thank you. And I know I said that was the last one, but this is really the last one. Again, shifting subjects. You've testified today that there are some pretty positive things going on in our economy right now, and that we're in a relatively good position on a lot of factors. In terms of risks to our economy, could you just tell me what you think are some of the bigger risks we should keep in mind?
I do think that the baseline outlook is a good one, favorable one. There are always risks, though, and as I mentioned, I do see the foreign risks as particularly relevant right now. So global growth has slowed. It's slowed in China. It's slowed particularly in the advanced economies, and particularly in Europe. When growth is booming around the world, we feel that as a tailwind. When growth is slowing, we feel it as a headwind. And I think we're feeling some of that now, and we may feel more of it. So that's a risk. Brexit is an event risk, which should not, in the end, have much of an effect on our economy, but it's something we're monitoring very carefully. Domestically, I think we're in good shape. Unemployment is low. Confidence is still at positive levels. So I feel like we have the makings of a good outlook, and as I said, our committee is really monitoring the cross currents, we call them, which are really the risks. And for now, we're going to be patient with our policy and allow things to take time to clarify.
All right. Well, thank you. And I know I speak on behalf of the committee. We appreciate the dedication of you and the other governors at the Federal Reserve. We all want to have this economy stay strong and grow stronger. And we look forward to making sure that we can achieve the right policies and help together to make that happen. My last closing comment would be I echo the concerns, or not the concerns really, but the issues raised by some of my colleagues about the implementation of 2155. I know you're working I know you just said it was the highest priority maybe at the Fed right now on the oversight level, but I just encourage you to move ahead expeditiously on those issues. A number have been raised already. I'll reiterate, our concern that we move as quickly as we can on the implementation of the requirements and the principles of 2155 with regard to those financial facilities, banks under $100 billion, and getting the stress testing levels for them at the right point. If you want to comment on that, you're welcome to. If not, I'll wrap up the hearing.
I might add one thing to my last comment, if I could.
Sure.
I would want to leave you with the thought that when I say we're going to be patient, what that really means is that we're in no rush to make a judgment about changes in policy. We're going to be patient. We're going to allow the situation to evolve, and also the balance of risks, and allow the data to come in. And I think we're in a very good place to do that.
All right, thank you. I appreciate that perspective. And once again, thank you for being here with us today. That does conclude the questioning for today's hearing. And for senators who wish to submit questions for the record, those questions are due on March 5th, Tuesday. Chairman Powell, we ask that you respond to those questions as promptly as you can. Once again, thank you for being here, and this hearing is adjourned.
Thank you, Senator.